and welcome to Africa Amplified, Bloomberg's monthly show, bringing the continent's biggest stories to the world. I'm Jennifer Zabasaja in Johannesburg. Over the next half hour, we'll hear exclusively from Africa's richest man. Aliko Dangote tells us about the role his refinery is playing in revolutionizing Nigeria's relationship to energy. Also ahead, with just days to go until Mozambique's presidential election, we speak exclusively with the frontrunner, Daniel Francisco Chapo, about his plans to develop areas producing LNG.
But the most important thing to say is that our intention, our project, is to continue to support investors who are investing in that region. We're talking about ExxonMobil, we're talking about Total Energies, we're also talking about Eni.
Plus, Bloomberg Economics digs into the latest African Central Bank decisions and what they could mean for investor sentiment and, of course, growth potential. But first, an update on some of the top stories we're following from across the continent. We'll have the latest from Kigali in the east and Dakar in the west. But let's start with news in the south, in Harare. It's only been 6 months, but it looks like Zimbabwe's latest currency experiment is at risk of being a bust. Almost half the value of the ZiG, short for Zimbabwe gold, has been wiped out since its debut in early April. The currency weakness paired with high inflation and rising interest rates is all spelling pain for businesses and, of course, consumers alike. For more, let's bring in Bloomberg's Ray Ndlovu, who's in the capital, Harare, for us. So, Ray, why did Zimbabwe devalue its currency so soon after introducing the ZiG?
Good morning, Jennifer. Yeah, so it's been a week exactly since Zimbabwe devalued the currency. This was done by the central bank last week. They didn't use the term themselves of devaluation. They say they're allowing greater flexibility in the exchange rate. This has been spurred largely by the widening gap between the parallel market and the official market. That gap had been growing over recent weeks, and the Zimbabwean dollar had been losing value on both markets. And that seemingly forced the central bank to act, and there was no other way for them but then to devalue the currency by 43%, and it's still been losing value since then, the week after that devaluation took place.
And undoubtedly, Ray, this impacts Zimbabweans and the businesses that are there, something they don't need. I mean, what has the impact been at this point?
Well, for businesses, most of them are failing to restock because there's been a serious shortage of dollars. They're unable to access dollars on the official market because no one really is willing to sell their dollars, and the central bank has been the only seller of dollars. So they haven't been able to get the dollars that they need to import and bring in goods to run their businesses. So they're failing to restock. Most of them as well are using a black market and turn to the parallel market basically to get that access to the dollars to be able to continue running their businesses. So there's been, a dislocation in terms of how businesses are operating. They have got running costs, they have taxes to pay, but then they're not able, to get that supply that they need. For consumers as well, I mean, this just puts more price pressures because everything has been adjusted upwards to reflect the new current exchange rate. So it's fanned inflation all over again. And their incomes as well have been slashed because of the devaluation. So we're seeing really some conversation as well taking place from government saying that they are looking to review salaries for public servants to, increase and match at least to what has taken place a week ago in terms of, trying to cushion them from the devaluation.
Bloomberg's Ray Ndlovu in Harare. Ray, thanks so much for that updated report. Let's move from the south and go to the west. The worst floods in decades across West and Central Africa are spreading misery as governments struggle with the scale of the disaster. Aid agencies are rushing to feed millions of displaced people across the region, which already has 55 million people going hungry. That's according to the United Nations. For more, let's bring in our reporter, Katarina Hoye, who joins us from Dakar. Katarina, how are communities dealing with this latest bit of tragedy and the scale of the disaster that we're seeing?
Comes on top of a hunger crisis that's already affecting 55 million people. And what we're seeing right now is that farmers are losing the land, herders have lost their livestock,
And there's very little resilience built already into these communities that also lack, early warning systems to let them know when the floods are going to come. So what NGOs and governments are struggling with right now is trying to get food, shelter, and clean water to people across the region. We know that the flooding have affected 4 million people so far, and that's double just in the past month. And this comes as we know that the rains are going to continue across the Sahel for at least another month with more flooding and as rivers rises.
And Katarina, you mentioned the struggle to get food and shelter to communities, but what is being done? What is actually potentially helping them during this time?
WFP World Food Program, the UN program, have scaled up aid, and they're trying to reach 1 million people across the region. People are currently sheltering in schools across Mali, Nigeria, and Senegal as well, which is likely to delay the school year. But I mean, to be honest, these countries are already some of the poorest countries in the world. We have Mali, we have Niger and Chad, and there's not a lot of funds or even the means to deal with these crises. Chad, who has been one of the hardest hit countries with 1.5 million people affected, made an appeal last month for $100 million, which they say they need in addition to assist this crisis, and they only are 10% funded right now.
Thanks so much to Bloomberg's Katarina Hoyhe for that updated report. Hopefully we see the situation improve there. Now, let's move to East Africa, to Kenya now, where a court has frozen Indian billionaire Gautam Adani's proposal to operate the country's largest airport. News of the deal sparked strikes and strong criticism from opposition lawmakers, forcing the government to defend the opaque circumstances surrounding the agreement. Bloomberg's Ndiro Oganga is joining us now from Kigali, Rwanda. So, Ndiro, just take us into really what the situation has been with this, because this has been a pretty tumultuous agreement that was proposed for this airport.
Jen, absolutely, and the government is beginning to consider alternatives. What we are hearing is the Prime Cabinet Secretary says that the planned sale of the diaspora bond could be used to fund critical infrastructure in the country, including the Jomo Kenyatta International Airport, that is in dire need of an upgrade. And this is because the appetite for Kenyan assets from the diaspora community has been growing. Remittances grew by 0.4 billion to 2.8 billion in the first 7 months of this year alone. And we consider this softening of the tone by the government has been influenced by a couple of things. There have been public pushback from the Kenyan community. There's also been a worker strike by the Kenya Aviation Workers Union. And now there's judicial action against the Adani deal, in which Kenya Human Rights Commission and Kenya Law Society says that the 1.8 billion investment by Adani is so meager in comparison to the concessions that they want the Kenyan government to make. In exchange, Adani says that some of the claims in this lawsuit are false, and that they submitted this proposal in line with the PPP Act of 2021.
Ndiro, this is not something that Kenya wants in its efforts to become a regional aviation hub, potentially. I mean, what does this do to their standing in the region?
It leaves them lagging behind. The government is now saying that it regrets the fact that Kenyan airport has been left far behind in comparison to its peers like Ghana, like Ethiopia, like Rwanda, who are making investments every single day. If we look at Ethiopia, they're building what is supposed to be Africa's biggest airport, valued at over $5 billion. And it's supposed to hold about 100 million travelers annually, and 270 planes can park in that airport upon completion in 2029. Rwanda is building a new airport in Bugesera in partnership with Qatar Group, $2 billion going into that, in what's supposed to be the aviation hub of Central Africa. So everybody is making investments, and if Kenya doesn't catch up in the next 5 to 6 years, they'll be left behind and they'll lose whatever glory they have left.
Yeah, not something the airlines even want to experience either. Ndiro Oganga in Kigali, thanks so much, Ndiro, for joining us. Now, coming up, Mozambique's presidential election is scheduled for next week. We hear exclusively from the frontrunner, Daniel Francisco Chapo, next. But first, here's some of our exclusive interview with South Africa's deputy president. Paul Mashatile has been on the charm offensive in the UK, aiming to attract new investment to the continent's most industrialized economy.
We want to grow the economy, particularly through infrastructure investments, build new roads, dams, new railway lines, because we want to ensure that those areas where we need to export goods through the coast, we have the rail lines working. So those are the things that we are focusing on. We are investing now a lot in infrastructure.
Subsidy is a very sensitive issue. If, I believe the problem is not only the subsidy, it is problem that, once you are subsidizing something, then people will be blotting the numbers and government will end up paying what they are not supposed to be paying. But this, our refinery, will bring quite a lot of issues out there. It will show the real consumption of Nigeria. Because, nobody can tell you. Some people say 60 million liters of gasoline per day. Some say, no, it's less. But right now, if you look at it, by us producing, everything can be counted. Right. So everything can be accounted for. And most of the trucks or ships that will come and load from us, we are going to actually, put a tracker on them to be sure they are going to take the oil within Nigeria. And that, I think, can help the government to save quite a lot of money.
So do you think it's the right time to get rid of the subsidies?
I think it is, because all countries have actually gotten rid of subsidies. Let me give you an example. Saudi Arabia used to give what Saudis, the citizens, believe that, look, oil is our own God-given gift. So the government shouldn't charge us for it. So government were selling it at a very low price. But today, as we speak, gasoline is about 40% cheaper in Nigeria than in Saudi Arabia, which I think it doesn't make sense. That is one. Number two, our price of gasoline is about 60% of the price of our neighboring countries. And we have very porous borders. So it is not sustainable. The amount of subsidies that were paid, government cannot afford those subsidies.
Dangote Group CEO Aliko Dangote speaking with Bloomberg's Francine Lacroix last month. You can see more from that interview across Bloomberg platforms now. And sticking with energy, we spoke exclusively with the frontrunner in Mozambique's presidential election, the Frelimo party's Daniel Francisco Chapo, and asked him how he plans to capitalize on the country's gas reserves as part of a wide-ranging conversation. Take a listen.
One of the challenges we have at the moment is terrorism in Delgado, where we have the LNG projects and the gas. What we are really going to do is to continue to work to support investors in that area and to also continue work to resolve this terrorism situation using two approaches. One approach is to combat terrorism on the ground, but to also find a way to dialogue with those behind this situation so that we can really overcome it and that there can be security and peace in that region, allowing the development of the LNG projects. But the most important thing to say is that our intention, our project, is to continue to support investors who are investing in that region. We are talking about ExxonMobil, we are talking about Total Energies, and we are also talking about Eni.
When we talk about the economy and the economic growth potentially that Mozambique needs to see, are you pleased with the program that has been put in front of Mozambique and been negotiated, or would you potentially want to look at that program and maybe think of different terms?
Well, international cooperation partners such as the IMF and the World Bank are very important partners for the development and growth of the Mozambican economy. Beyond providing financial support, they also provide technical support. this financial and technical support from the international partners, such as the IMF and the World Bank, are very important for the growth of our economy and macroeconomic stability of our country. So we will continue to work with the IMF. We will continue to work with the World Bank, and we will continue to work with these partners which are extremely important for the economic stability, most of all, the macroeconomic stability of Mozambique. Now, what we are going to do is continue to strengthen the relationship of friendship and cooperation with other countries. Also friendship and cooperation with these LNG players, but also cooperating with partners like the IMF and also the World Bank. In relation to Rwanda, Rwanda is a partner of Mozambique, and being so, at this moment, it is very difficult to say in detail how this is going to be, because I am a candidate. But I am absolutely sure that after I have taken office, I will receive the dossier. And only after understanding the dossier in a very detailed way can a response really be given as to how this cooperation that exists at this moment will be responded to.
That was Daniel Francisco Chapo, Mozambique's ruling party candidate for the presidential election on October 9th. Now, coming up, we discuss the economic backdrop driving major central bank decisions across the continent. That's next. Stick with us. This is Bloomberg.
Where we discuss all the constraints for institutional investors to come into the developed country. Various constraints were raised. One is guarantee, predictability on the policy front, and exchange currency, local currency. So the risk attached to local currency is something very, volatility is affecting investment. So we are putting right now instruments. We have a working group which is focusing right now on solutions that will help offset that risk.
That was the managing director of the World Bank's International Finance Cooperation, Mokhtar Diop, speaking with me about currency volatility as a constraint to investing in emerging markets. Let's turn to central banks on the African continent. It's joined global majors such as the Fed, the Bank of England, and Bank of Japan with decisions. It's been a jam-packed September. It was a jam-packed September with South Africa and Ghana cutting and Nigeria surprising with a hike. For more insight on these decisions, Yvonne Mango, our Africa economist, is joining me now in studio. So, Yvonne, let's just start with South Africa and Ghana. I mean, what led to this, in your opinion?
Okay. So the good news is Africa's begun to make a turn in terms of its inflation cycle. We are beginning to see a slowdown. In the case of South Africa, it was expected. Inflation fell back to the midpoint of the target range, the 3 to 6% target range that the Reserve Bank would like to see it in. So we did see a cut as anticipated, and we expect more to come. In the case of Ghana, which has significantly high inflation in the high 20s, in the low 20s, we have seen it fall from significantly higher levels. And the reason we saw a cut there is because it got high positive real rates. The policy rate was at 29%, and they cut by 2 percentage points. And the reason behind that is they anticipate that inflation will fall back to around 13 to 17% by year end.
And Yvonne, Nigeria's hike took a lot of people by surprise. Did it as well do that for you?
Oh, yes. The consensus view and our view as Bloomberg was that Nigeria was done in terms of rate hikes. But indeed, we did see them hike. It seems they're particularly concerned about energy costs. We have seen fuel shortages in the country, and that's led to price increases. And the reason why the market expected no hike is because inflation had made a turn. It's began to slow down, but I think the central bank would like to be cautious. Hiked, and it seems they're not done. There may be a couple more hikes to come.
And it's still a bit high, I mean, when you look at it in the context of the broader continent.
Absolutely. We're sitting at around 32% for Nigeria. I think Nigeria and Angola have some of the highest inflation rates in the region.
So then, Yvonne, if we take a look at, let's go to East Africa and look at Kenya, because we were speaking earlier with Ndiro about some of the multiple factors that are that the Kenyan economy is really facing right now. What does that mean for the next central bank meeting that's happening?
Okay, so fortunately for Kenya, they've seen their currency appreciate from the beginning of the year quite significantly, and that's provided some support to the to inflation rate. Inflation sitting around 4 to 5%, which is quite low for an African country, and the policy rate is at around 12%. So they've got quite high positive real rates, giving them some scope to cut at the next meeting.
So, I mean, Yvonne, if we take a look at what is happening in the U.S. and elsewhere we were mentioning earlier, how does that potentially affect the path of some of these central banks? Or does it not at all, given the internal factors that they're facing on their own?
Well, how it helps is that for countries that feel inflation is low enough for them to cut, the fact that the Fed has begun to do so gives them the scope to do so, because it implies that their currencies won't be undermined. So yes, we are seeing a lot of countries begin to track the Fed position, but that's mainly because, similarly to the US, we are seeing inflation beginning to make a turn.
Is there a risk potentially to some of this activity that is happening with the Fed, with the BOE, for the central banks here on the continent?
Not in particular, because most of our markets are illiquid. So I'd say that it's mostly localized factors that are actually driving monetary policy, in particular currency movements.
And I'm glad you bring up currencies, because that is always the volatile part of what is happening across many of these economies. And in particular, let's stick here in South Africa. The rand has somewhat stabilized, right? We've seen a number of stability, encouraging signs from the government.
Correct.
Does it dip lower, potentially? Does it have more room to strengthen?
I think there's scope for it to strengthen further. It is, despite the appreciation we've seen since the formation of the Government of National Unity, it's still an undervalued currency. So yes, we do believe there's scope for it to strengthen further.
All right, we'll leave it there. Thanks so much, Yvonne Mango, our Africa economist at Bloomberg Economics. You can find all of her research, of course, on the terminal. Now, before we go, Bloomberg is launching the inaugural Africa Startups to Watch list to find the smartest ideas and founders from all over the continent. If your startup was founded to solve some of Africa's challenges or opportunities, get your application in by November 8th. You can go to Bloomberg.com or scan this QR code to find out how. And it's also the theme of this week's Next Africa podcast. It's available on Apple, Spotify, and wherever you usually get your podcasts. Also, be sure to subscribe to the Next Africa newsletter on the terminal and our website. That's all the time we have for it today. Join us again next month and every month on the first Friday of the month. I'm Jennifer Zabasaja. It's goodbye from Johannesburg. Daybreak Europe is up next.